Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Gordon S., Luke A., Andy J., and Mike P. We've got a new guest joining us on the program today. Mr. Michael Konnert is with us. Michael is the president and CEO of Vizsla Silver. The company is focused on the exploration and development of the large-scale Panuco silver project in Sinaloa State, western Mexico. In the preliminary economic assessment for the Copala silver deposit within the project area, it is anticipated to have an average annual production of about 15 million ounces of silver equivalent over its initial 11-year mine life, with additional potential for further discovery and expansion. Vizsla Silver is listed on the New York Stock Exchange under the symbol VZLA, as well as on the Toronto Stock Exchange under the symbol VZLA. Mr. Konnert, welcome to Smith Weekly Discussions.
Well, thank you very much for having me. I'm excited to be on for my first time.
Michael, it's great to have you on the program. First time here. Well, why don't we get going? Our audience knows, of course, you're a new guest on the program. Why don't you just start off here by covering your background and experience in the junior natural resource sector and silver markets?
Yeah, absolutely. So I'm an entrepreneur in the natural resources space. Was the founder of Vizsla Silver. At the time, it was called Vizsla Resources. And starting Vizsla was something that I did basically following a transaction that happened with a cobalt company that I'd started as well with my partner Craig Perry, who's the chairman of Vizsla Silver and the co-founder with me of Inventa Capital. So I've been active in the business for close to 15 years, working on primarily TSX V listed companies, but I have experience, of course, with some ASX companies as well. And really, I started in the business, coming to the business with a huge amount of curiosity around the stock market, projects, what makes a project good, what makes a project bad, how are companies funded, all these kind of interesting topics that I was really new to when I was in business school. And I'm born and raised in Vancouver, so Vancouver is a global hub for junior mining, particularly, but also some of the world's largest senior mining companies have started and are based in Vancouver. So it's a good place to cut your teeth. And I was studying entrepreneurship and business at school, and this was during the bull market of the mid 2000s going into 2010 and 2011. And I started to see what was going on around me in terms of the business environment in Vancouver, and I was just kind of drawn to the business, and combined all of these things that I liked, including the stock market and venture capital and so on, and entrepreneurship. So when I realized that it was all here in Vancouver, I kind of quickly took to learning as much as I could, and meeting as many people, going to the conferences that occur here, and was able to get my first role at a company called Pretium in about 2010, I believe that was. And from there, I basically worked with different groups, a family office at one point, another junior mining company based in Mexico. And during that time, I was trying to accumulate as much experience and network and knowledge as I could. Again, going back to those questions of how come some companies are successful raising money and some aren't? What makes a project good? And a lot of that came through mentorship. And I was lucky enough to meet Craig Perry, who quickly became my mentor, as well as Simon Smirlick, who's our chief operating officer now and was an early director of Vizsla Silver as well. And those two gentlemen were able to, they shared with me the incredible amounts of knowledge, particularly technical knowledge, And through that, we were able to basically build Vizsla Silver and find this Panuco district. So my background, entrepreneurship, business, but really a keen student of these junior mining markets.
Michael, thank you for that. Yeah, Craig's a great guy, and the Inventa Capital Group has got a lot of things going here and has had great success in the past with other companies. And Vizsla Silver is another success that is ongoing here and more to come, I suspect, as well. So I really appreciate you going back over your background and how you got into this sector and why it excites you every day to continue to pursue discovery and potential production and all the things that come with these companies from the early drill bit days all the way through to finished product and being sold onto the markets. Just with that, I'd like to have you also, Michael, I'd like to hear about your thoughts on the market as things stand today. Overall sentiment in the juniors, of course, over here, we know that it's fairly weak for most companies out there. And then also what you would expect to see in 2025 for the sector and really what you see as the most impactful to the silver price going forward.
Absolutely, and the silver market, in my opinion, is the most exciting opportunity in the commodity space today, and that really comes down to a systemic undersupply of silver. So we have an incredible demand on silver. It's north of 1 billion ounces annually, and our supply falls short of that, and it's fallen short of that by about 20% for the last 3 years. So we're sitting here in a structural supply deficit for silver that's been growing. Um, it's multiple years long now, and there's no end in sight as far as we can tell. There's really no stopping the demand on the industrial side for silver, as well as the demand on the monetary and investment side for silver. So we're really seeing an uptick in investor demand for silver. But strictly looking at the growth profile of the industrial application of silver, that is slated to continue to grow, till the end of this decade here and beyond, and continue to enhance this growing deficit and gap between supply and demand. So we love silver. Silver historically in each bull market that has occurred in the last 100 years, silver has delayed its move behind gold. It has lagged behind gold, and then after gold makes significant moves, sometimes it's 6 months, sometimes it's 9 months, but you see a very drastic move in silver, and that's happened each of the last bull markets in the last 100 years. So, we believe that there's a substantial move coming for silver based on those excellent fundamentals that we talked about. And then if you look at really just the profile of mines that are coming online, or how does the silver industry really meet that demand, there really isn't any substantial project. There aren't any substantial projects that can come online to fill that 200 plus million ounce annual shortfall. So, a lot of that supply comes from the sidelines, comes from ounces that are sitting on the sidelines that come in, whether it's scrap silver, recycled silver, investment held silver coming into the market. But when you think about Vizsla Silver, so in the first couple of years, first 2 years of production, according to our PEA, we'll be producing over 20 million ounces of silver equivalent. Of that, it's about 12 million ounces of silver itself, and that will be one of the world's top 5 silver equivalent producers, and the largest coming online in the near term here. And even that is just a small fraction of what's outstanding on an annual basis of supply deficit. So to me, it doesn't appear that there's any way for the mines to catch up to what we're seeing in silver here. So I suspect that the price is going to continue to rise. We've seen since we started Vizsla Silver, the price go from $14, $15 an ounce to well north of 30. We think that that's a great move, but it's still short of what's possible and what we're expecting. So I think the future for silver is extremely bright, and that happens at a time where the backdrop for Vizsla Silver is very exciting, and I see a world in which in the next couple of years here, by second half of 2027, which we're aiming to be in production, that Vizsla Silver will be producing high grade silver at a time where the price really reflects what's happening here on the supply and demand side.
Michael, and with that, just a few more thoughts there as you were talking made me think of a couple things. How do you look at the secondary supply out there for silver operations? That obviously silver is not the focus; it's a byproduct material that comes out, and then also, how you look at inventories out there. If you see that the conditions in the silver market really can't last that much longer before something has to break, or do you see that there's, maybe an unknown period of time, depending on what happens with the broad markets and that fear factor, I suppose, with monetary conditions around the world. How do you look at some of those factors as impacting that price potentially to fall in where you guys would expect cash flowing production?
Well, exactly, and you made a very good point there about the byproduct supply. So the primary supply of silver isn't from primary mines; it's from secondary supply, where silver is not the primary commodity produced. And that happens primarily in large open pit copper porphyries in South America. And those are getting deeper, they're getting lower grade, they're getting harder to mine. So we're starting to see that secondary supply fall away, which means that, in order to meet that gap, the above ground supply of silver needs to step up and fill that in. But the interesting thing is that when we've looked at it, we've tried to model. It's a very hard number to figure out. But in past times, we've modeled it, and apparently, a few years ago, there was about 2 billion ounces sitting above surface that potentially could enter the market. And at this point here, based on basically calculations that I've seen from the Silver Institute and from our own internal modeling, I suspect that there's probably less than a quarter of that left above ground at these price levels that are available. So the next leg up is into the 40s and then beyond. I think it's possible that we may see $100 silver at some point in the future. But these are great prices. $40, $50 an ounce would be wonderful for us. Producing what we expect to produce here at Panuco at a very, very low AISC. So, we're a top 5 producer with the bottom quartile AISC as modeled by the PEA. So we think that this is all going to take place here as we move from PEA, from exploration into development. I mean, we've just started our test mine at the project. We're working on our feasibility study slated for 2025. So all this I think is going to unfold at an excellent time for Vizsla Silver.
Excellent. I appreciate the additional thoughts there. Well, why don't we get into Vizsla Silver? We've been talking just lightly about it here just to get started, but for the audience who may not be familiar with the company, just give us a quick overview of the company. We'll get into some details and maybe start us off with, how you guys came across this land package and you guys started consolidating the area.
Going back to that history, my history, I suppose, Craig and I had our cobalt business, which we basically started and consolidated a very large high grade district in British Columbia, and we're able to partner and sell with an Australian listed firm, and our shareholders and us. We did very well on the back of that, and so that gave us some cash to go and basically search for projects globally. And for a couple of years, I was basically flying around the world looking at projects in South America, North America, some select areas, and the projects had to meet a criteria. The criteria had to be a metal that was impacted by electrification. So copper and silver were our top picks. Had to be a project that could move very rapidly into production, and it had to be something that was high grade and had extreme exploration upside. And over time, we're getting a little bit discouraged because those are pretty lofty goals, lofty criteria. And a friend of mine, actually the gentleman that we did the cobalt deal with, who was the vendor of the property, called me up one day and said, Mike, you need to take a look at this district here in Mexico. This is a project that we know the geologist down there, that he'd been working on consolidating this project for some time, and needs some help. And looks like he's kind of hit the end of his road there. He sent me over some information. That was on a Friday. That Monday or Tuesday the next week, Craig and I were on a flight down to the Panuco district. We flew into Mazatlan and drove from Mazatlan about an hour up the road and we didn't even turn off the road. One of the road cuts there that we drove through was just spectacular, and we could see this incredible hydrothermal system occurring at the property. And, from that moment on, we were kind of on high alert to see what this opportunity might look like. And so we ended up driving through this district again through a highway that, crisscrosses all these major veins and structures, getting to underground mines, going in these underground mines that had these spectacular void spaces where a ton of mining had happened. We found this mill, of course, that was part of the operating situation there, and really it was not very hard to see, the history of mining in this area and the lack of sufficient exploration, but substantial production history. Kind of had all these perfect things, plus the infrastructure. So we basically at that point decided that we stop at nothing to get this project, and we ended up doing a transaction with that geologist. But I spent about a year there in country working with the multiple families that own these concessions, and really the key was to consolidate this project for the very first time. It had never been consolidated, had never been part of one large property package that encompassed the entirety of the district. It had always had segmented ownership, fragmented ownership from various families really for the last 450 years. This is a historic district that dates back to Francisco de Ibarra. Francisco de Ibarra came across in the mid-1500s from Spain and discovered the Fresnillo district, discovered the city of Durango and the mines there. And then later, his third discovery was this Panuco district, and he passed away in the district in the late 1500s. So this since that time had been mined at varying scales, but at some point in the 1600s, it was sending back about 6% of the silver and gold to Spain from Mexico at that point, and actually from New Spain, so that included Peru. So it was a prolific producer, but time, I suppose, forgot it. People were a little bit worried about Sinaloa as a jurisdiction historically as well. And, we decided that the opportunity here was too good to pass up. And, we entered into an option agreement to purchase the two halves of the district essentially for $43 million US. And the funny part about that, of course, was that Vizsla was a $2-3 million IPO that we led in 2018. At the time of doing this transaction, we had a market cap of maybe $10 to $15 million and really hardly any assets except for a very enthusiastic management team and a very strong board. And we were able to go from having an option on a property for $43 million to a couple of short years later having the world's largest undeveloped high-grade silver resource and successfully exercising that option. And then now, of course, having, I think, the most impressive project economics of any silver developer out there. So we've done all of that basically within a 5-year window. And the next 2.5 years are basically taking us from this late stage of exploration and early stages of development into production in 2027.
Good background starting from when you guys first saw this property, and of course the subsequent work you guys have done to further consolidate and add properties to the district there. While you guys do have a discovery under your belt, there's a lot more left to look at here that hasn't even been tested. So with that, just on the capital structure of the company here, Michael, I wanted just to have you touch on that briefly before we dive into project details, but cover the cash on hand where we are today there and what you see really that will cover as far as work in the coming months and obviously well into 2025, the shares outstanding, of course, and then the key shareholders on the roster, including you, management, and the board.
Today we have about 272 million shares outstanding. Our market cap on a US basis is about 600 million US, and we have about $88 million US in the bank, which is spectacular. We've been very successful over the years at raising money, and we've been able to remain very well capitalized. And just a quick side note on that cash, it basically allows us to be fully funded for all of our near-term and medium-term goals, basically all of our goals until a construction decision. And then that cash on hand actually funds a good portion of the equity required to construct the mill and move into production. And we've been fortunate, that cash comes in primarily by way of private placement, and we've been able to attract some very marquee shareholders, including Franklin Templeton, the Sprott organization, and various funds under the Sprott organization are very large shareholders of us. We have Eric Sprott as a large shareholder. I think there's probably about 5 or 6 various ETFs that own Vizsla now. We've started to get into that territory where it's a must own with the ETFs. But I think importantly, it's important to note that we have between 10 and 15% ownership from insiders and management and close advisors. So there is a lot of skin in the game. I was the very first shareholder of the company. Our management team have been early shareholders for many years. And we've been buying stock up for many years on market. So we're active in buying the stock. We've been supportive for basically since the IPO. That's something that sets us apart. We're certainly not kind of that hired management team. We're really a group we would consider ourselves all as kind of a founder management group of this company. So we really have that skin in the game.
Michael, thank you for that. And you mentioned a couple of the people before already. Of course, some of the folks you mentioned are well known to our audience. Is there any other folks that you want to mention there on the ground, or of course at the management level, that you want to mention that are helping to support bringing this project forward?
Yeah, I think it's important to highlight, of course, Craig Perry, our chairman. Craig's had a number of large successes, including NextGen Energy and Skeena and ISO Energy, and he's cut his teeth at Rio Tinto. Simon Smirlick, who joined us from originally running Ausenco Engineering, where he was there for 15 years, and recently the COO of Ausenco, and he built 40 plus mines during his tenure there. One of the best and probably most notable is Silvercrest Las Chispas, which is almost a direct analog to what we're doing here. Jesus Velador is our Vice President of Exploration. Jesus has a very long and successful track record of exploration in Mexico. He's probably one of the best guys for the job that anyone could think of, because he's got a PhD in the exact type of deposits that we have. But more than that, he was on the discovery, basically on the Fresnillo side of the discovery of Juanicipio of the Valdecañas vein. So has a number of major successes under his belt here in Mexico. And I always like to highlight Eduardo Luna. Eduardo is really the godfather of mining in Mexico, truly a legend, and has joined us as a director in the last year or so. His experience was with the San Dimas mine. San Dimas is another analog, geologically a true analog to the Panuco district that we have. And he'd been there basically longer than anybody, and was part of the leadership that created Gold Corp and harnessed the power of that San Dimas mine. And then later was one of the early founding directors of Wheaton Precious Metals, which was a stream on that San Dimas mine. So he's seen it all. Very important director for us. And then of course we have an extremely strong team on the ground led by Hernando Riuda, who's our director of Mexico, Fernando Martinez, who's our director of projects, and the whole group there is very, very strong. So what people probably don't see unless they come on our site tours is really that bench strength and that depth of the team in Mexico, and we're very, very proud of all of our members there.
Good to highlight some of those folks, and a lot of experience in different fields here. It'll obviously lead to hopefully a successful construction of this project in the future, and also operation. Well, why don't we get into the Panuco project here, specifically the work ongoing at the Copala silver deposit, which is envisioned to be a conventional underground mining operation. The company put out a PEA during July of this year. Talk about the findings in that PEA.
Well, this PEA is really for us is monumental. It's really an excellent outcome, something that really surprised us. Even we didn't think it was going to be as good as it is here. And really, when you think about the PEA area, we need to think about the Copala vein, and the Copala vein, as well as the Napoleon vein, which sits about 500 meters to the west of the Copala vein. But the swarm of veins that's in our PEA represent about 5% of the known strike in our district. It's a very small portion of the district, but despite that, it's a very meaningful top 5 silver equivalent producer. And again, going back to that consolidation of the district, that's such an important point because it's created the opportunity for us to have this PEA area, but also to have the rest of the district, which is massive to continue to explore. But thinking about the PEA itself, I think that the biggest takeaway is that it's industry leading economics, and the cash flow that we see relative to the capex is spectacular. As a matter of fact, the payback is about 9 months, or it was 9 months payback period based on our base case metal prices, which are silver at $26 and gold at $19.75. That gives us an NPV at a 5% discount of 1.1 billion and 86% IRR. But if we think about the current metal prices, we're actually looking at probably something closer to a 6-month payback, $1.5 billion NPV and triple digits, so north of 100% IRR. I haven't seen anything like that, certainly in the silver space, maybe ever actually, I come to think of it, but it is, it's extremely, these are robust economics here. So we're thrilled about that. One of the best markers for this is the NPV to capex ratio, which sits at north of 5 times. This is a really important metric for us because it means that we're creating a lot of value, return on investment for that $224 million capex that we outlined in the PEA. So the result is that we have post-tax free cash flow well north of $200 million for the first 2 years. That's important. That allows us to pay back debt, pay back the project very quickly, and then continue to mine basically the very high-grade material at the Copala vein. The Copala vein itself is remarkable. It was a blind discovery, actually, and this kind of speaks to the prospectivity of the district. But the Copala vein was a blind discovery that we made as we were stepping back and drilling to the west into what is the Tajitos vein. And we hit this 82-meter true width structure that was grading north of 200 grams silver equivalent in total over that 82 meters. Within that, there were pulses of very high grade, 10 kilo type silver equivalent grades in that. And, we were shocked because, of course, we didn't expect to hit this structure, and certainly not something that was so well mineralized and so wide so early in that drill hole. And through that structure, we ended up hitting the Tajitos vein, and that was great. But that marked really the discovery of Copala, which turned into now well over a mile long, 10 meters thick. Average grade will be north of 600 grams there. It's really spectacular, very, very high grade, very thick, and totally mineable, really near surface, consistent mineralization. It's kind of the perfect backbone structure for a mining operation like this. It's something that allows you to weather any metal price, really. It gives, because of the high grade nature and the thickness of the structure and the continuity, it gives you this ability to have a really successful startup at the project, pay back any debt, pay back the project, and then take advantage of the nature of the vein and be generating excellent free cash flow from the rest of the district. So Copala is it's a spectacular structure. It's something that I would be very surprised that we found the last of these types of structures in the district. Typically, statistically, it's unlikely that we found the best so early on. We're hunting for other Copalas right now, but there's still a lot more at Copala to continue to explore. It's open along strike. It's still open at depth. We have lots left to learn about Copala, but we've done a ton of infill drilling. We're going to have a measured resource come out shortly on Copala, measured and indicated, and we have a high degree of confidence at Copala of what we're seeing in the resource. In addition to that, I was just down on site last week. I got back over the weekend here, and what we're seeing there at site, of course, is the beginning of our test mine. So we've started the earthworks above the box cut, and I'm really looking forward to continuing that into the new year. In January, I think we're going to see the test mine start in earnest, which is very exciting.
Michael, thank you for that. And I think it points to some of the potential that can happen right there at Copala, as well as how some of that work on infill and some of the work you guys are doing there will feed into a feasibility study and how that might change how this project's being looked at presently, aside from all the other work outside you guys are doing there to potentially bring in other deposits as well. Specifically, back over to feasibility, you guys have targeted the second half of 2025 to release a feasibility study, which is a fairly accelerated process, and I think speaks to your guys' desire to get this thing moved forward as quick as possible. Just talk a little bit about some of those key items as far as the initiation of permitting work, where that stands, what you guys see as a realistic timing of construction start, obviously based on a positive feasibility study that works out for that to move forward, as well as just, again, rough schedule, where you would see that first production potentially coming in.
So I think the best way to put it is for us, we have a big vision, a big goal of becoming a producing silver company in 2027, so the second half of 2027. In order to get there, what we need to do is release the feasibility study that we're working towards. Of course, we've completed that infill campaign. The test mine will fill and be a part of this feasibility study, and we're expecting that for the second half of 2025. Now, the biggest unknown and the biggest risk for us right now is the permit. So the permit is the thing that certainly is the thing we control the least. We have a pretty good understanding of the geology. We have a pretty good understanding of what's needed on the engineering side, on the plant side. Infrastructure is excellent here at the project, but the thing that we really are reliant on is that permit, the full permit to operate. It's been an interesting time in Mexico over the last little while. There's been a lot of talk about open pits. Claudia came out recently, the president of Mexico, and said that the open pit ban needed to be reviewed, which is, I think, a positive sign. I was in Mexico City a few weeks ago meeting with the government, and the noises or the conversation that we had, and some of the points that they made were all positive from my perspective for a project like Vizsla's here, which is a critical mineral. Silver is a critical mineral in the eyes of the Mexican government. We're creating a huge amount of benefit to the local community. All 5 of our ejidos that we share the land with are on side and have supportive agreements. So it is an unknown. I would say that I think the public has a somewhat pessimistic view of permitting in Mexico, but I think the reality of Mexico, the mining operations and permitting there is actually quite positive for Vizsla. So I expect that we'll be in a position to release our feasibility study sometime in the second half of 2025. It'd be excellent if we are fully permitted in early 26 or the first half of 26 to move into that, into that production and construction decision in order to achieve that goal of second half of 27 for first pour.
Yeah, I do think just your comments on the permitting, I appreciate that. And I do think that permitting, while maybe become increasingly challenged, I do think the good projects and the proper process and the doing the right things will get you past that hurdle. And I think you guys have definitely moved good progress in that direction. And we'll talk a little bit more about, local community and some of that work here in a moment. Just one other thing here, just talking about the project, just with respect to infrastructure, I think it's important to highlight this as well, Michael. Just talk about infrastructure nearby the project generally, and then also include power and water specifically.
Absolutely. And one of the best things about the project is the history of mining here. And, just even to add to the permitting comments there, this is a district that has been in production almost continually for 450 years. And as a result, there's an incredible amount of disturbed areas, and whether that's disturbed from mining or disturbed from agriculture, subsistence agriculture from the areas that support the miners, these types of things. Great way to explain the infrastructure here is that we've drilled 400,000 meters of diamond drilling without ever having to build our own roads. So we've used existing trail networks and road networks within the district. And that really is because it is a historic mining district. So when it comes to permitting, we were able to benefit off of the disturbed areas, and we actually permitted the test mine based on a disturbed area. The mill site is all a disturbed area that we've selected. So there's a lot of advantage to that. And I think, in the context of mining in Mexico, it's much easier to get permitted on areas that have this type of infrastructure, that have this type of disturbance. So we have an excellent slide, plan view slide in our deck that you can see the spatial distribution of the veins, the roads that run basically over top of the various veins. And then we have a smaller highway, a kind of a local highway that runs to the north of our structures. And then to the south of that, we have a large toll highway. In between those highways is a significant high voltage, high tension power line. Then from that, there's small local lines as well. And we were down at the project doing a site tour with investors last week. And we have this excellent lookout point that basically you look down from a hill, you see the mill site, and it sits directly underneath the power line. The best part about this is that the topography in the area allows us to build the mill that would be basically out of sight and out of mind of the local community. The test mine area is also out of sight from the local community. It's all underground mine. It's not open pit. Historically, this has been an underground mining area. So, we really fit into kind of the topography, the culture of the area. And our goal is basically to be a mine that the community doesn't have any negative implications or impacts from, other than, I should say, doesn't have any impact from other than the cash flow and the jobs that are created. So that's only possible because of this infrastructure and the topography. We've also located the tailings storage facility basically in a drainage that's out of sight and away from any communities as well. So, we're very fortunate because this is possible here in this area. But the infrastructure, if you were to quantify it, I'm sure would have, very meaningful cost savings for us as we move into production. But more than that, it actually just expedites the pathway and the time frame for us to move from, what we have now, which is this incredible PEA, into production quickly.
With that, are you guys able to source water locally there as far as water wells, or how exactly are you guys coming up with the water for the project?
So it'll be a mix basically of water from rivers, water from underground, and water from surface, which basically is rainfall capture. We look to permit the river capture, the river water, but really ideally what we'd like to do is supply 100% of the water. We still have a bit more work, and that's going into the feasibility, but ideally we're able to use basically underground sources from old workings, as well as surface water capture during the rainy season. So we're trying to be as minimally impact on the water as possible. We basically apply the principles of regenerative mining to this. And so, we want to be able to be kind of a net positive when it comes to water. And so we're still doing a bit of work on that, but, this is an area that's substantially wet. It's not an arid region. This area almost sees almost too much rainfall. You could almost look at it that way, which is a benefit to us because we're able to capture it with surface encampment, which will be great. So we're excited about that. And as far as power, you have the power directly overhead. We expect that we'll be able to tie into the local network of power. However, we're not 100% reliant on that because there's recent cases where companies haven't been able to access power in time. So we've contemplated that in terms of the PEA and the feasibility to have local generation with generators early days if we need it.
It's always good to have that backstop, right, where you might not be able to get 100% from local grid, but you can have, on-site generation that'll satisfy the needs of the project. And also appreciate your comments on how you guys are looking at the water mix and obviously the usage there, and reclamation and treatment, and also reuse of the water. So appreciate the thoughts on that. Just with respect to the financing mix, Michael, and I know this is very speculative, early days, of course, but it's always good to get your thoughts on creativity with financing package for a project like this. Right now, we have a 224 million US CapEx per the PEA. Obviously, that's subject to change in the feasibility study. But given where the company sits today, Michael, on valuation, and of course the work and improvements expected between now and financing, what do you think is the best financing mix? How would you put this together if conditions were positive towards Vizsla Silver when you guys decide to start the financing?
Well, it's something, that's something that we think about a lot and have done a lot of trade-offs and contemplation on. And, in the current situation, I think the best way to finance it is a mix of debt and equity, with debt being about 60 to 70% and equity being the balance. That would be in the absence of our Vizsla Royalties company. But, I think probably the best way to look at the financing stack here would be that, Vizsla already has substantial cash on hand. If we're able to monetize the ownership stake we have in Vizsla Royalty, that will give us more cash and potentially enough to cover the vast majority of the equity required for construction. And then the balance, whether it's 60 or 65%, would be funded through project finance debt, ideally through a mixture of various different banks, but low covenant, kind of conventional, typical project financing. I think that's probably the likely outcome for the project. Based on that CapEx, it's a small port. I mean, it's less than half of our current market cap. That's a very enviable position to be in as a junior. I think we want to minimize dilution, but if you got into a market where silver goes to $100 an ounce and Vizsla's at $15, there's obviously the window that you could just raise the equity and finance it through equity. So we have optionality. We love to have optionality. It's one of our our favorite things when we're running the company. We don't want to be pushed back into a corner and have only one outcome, and that's typically when companies have to take bad terms or things like that. So with Vizsla Royalty, that spin out, Vizsla will own about 35% of that company by the time these warrants are exercised this month. We think that we can monetize that for a large portion of what's outstanding with regards to the equity component of the capex. But this is also something that's very attractive to project finance providers like banks because of the high grade nature, the early cash flow, and the rapid payback period.
Michael, let's stay on this for just a moment. First, I want to talk about the royalty company startup that you guys spun off earlier in the year. I want to discuss that briefly. To see a development junior like Vizsla Silver out there with a market capitalization that exceeds the capex for essentially the phase one of this project, that's pretty rare in this market, to be honest. There's not a lot of junior companies out there that have that condition today, given the market conditions playing in quite a substantial role to that. But I think it speaks to your guys' work completed, the market's anticipation of what else is out there as far as upside, and some of those other features that you guys are continuing to delineate as you go through this development phase for the first deposit. And on that, I want to just stay on the royalty bit for a moment, and then we'll switch gears. Two things there. As you know, there's a few royalty majors out there that have been in consolidation mode in the royalty segment of the market. They obviously want to try to remain competitive against the banks. First, would you still look at royalty stream companies as potential part of the financing? And then secondly, with that startup that you guys did, Vizsla Royalties, which of course has a NSR over the Panuco project, just talk briefly about that startup and what that startup will be doing to focus on the royalty stream market as well.
I think Vizsla, again, that optionality is so important to us, and the way that we would, I think, be willing to bring on, I guess, the way to use a royalty to finance the company would be to sell Vizsla Royalty. I don't think we would like to do an additional or external royalty on the project and further impact the economics. The project has such good economics that even a small royalty or even a big royalty doesn't make a huge difference, or a stream doesn't make a huge difference. But those are forever, and we prefer to have shorter term project finance debt. I think it's better for shareholders overall. So, of course, thinking about this years ago, we thought, well, what's the best way for our shareholders to get value out of a royalty? And there's basically latent value within the company that isn't being seen because of these royalties. They're often not valued properly, or the lack of royalties is not valued properly into the overall company valuation. So what we decided to do was to follow the Great Bear model and spin out a royalty over the district. And that goes to shareholders. It did go to shareholders. Now it's a publicly traded company under the ticker VROY, VROY. And shareholders have already seen a win coming out of the gate there, where we created about 50, 60, $70 million of value within the first few weeks of trading that wasn't reflected in the market cap. And we know that because the shares of Vizsla Silver, the mothership, continued to trade at that level or slightly higher during that period of time. Now, with that, of course, Vizsla Silver owns about 35% of that company. And so it can choose to sell its ownership block. The company could be sold as a whole, like Great Bear was, or any number of kind of activities could happen where Vizsla Silver could just sell those shares on the market, which is probably unlikely that would happen because there is a pretty competitive market for ownership in royalties like this. But that's the way that we would look to play the royalty side of the finance. Now, the value of Vizsla royalty continues to grow with each of these milestones. So the closer and closer to production, the higher the value of Vizsla royalties. So it makes sense to wait in order to do that, unless there's a competitive bid for the company now. But we really don't want to sell Vizsla Silver. We think that the true value of Vizsla Silver is not nearly reflected in the current price here when we think about what's possible in terms of organic growth in the future out of cash flow. I suspect that this could be multiple times higher than it is right now in terms of market cap. But we also want to show and give shareholders an opportunity to benefit along the way, or to have perhaps a transaction along the way. So Vizsla royalty is something that we'd be willing to sell, basically to generate value for shareholders, but also to generate part of the capex for the build of Vizsla Silver in a non-dilutive fashion.
Michael, I like how you guys have actually structured this. This actually makes the outcome here could be actually far better than maybe some of the traditional stream royalty methods to help finance the project. So I think how you guys put this together, I think, is a pretty good level of thinking in terms of how this could potentially play out. And it also helps control better what you guys are up to here as well. So I appreciate the thoughts on how you look at that side of things. With respect to ongoing exploration work and, of course, results that are coming out of that, Michael, Copala will be expanded most likely at some point here by the time you guys get to the feasibility study, increased resources, and of course mine life likely to increase as well. But then also you guys are doing property-wide testing, or essentially the whole district. You guys have different areas, and you could probably spend a huge sum of money on testing the rest of the district that you guys have consolidated here. Of course, you'll do that in a staged fashion as you continue to progress development. And you, of course, have the potential for nearby discoveries. And I know you alluded to this, and this is something you guys want to focus on in parallel to development at Copala. But just talk about how you guys look at this expansion and exploration upside, why you guys continue to move down the development stages.
I think just to set the stage a little bit, we think about the original Panuco district, which is about 7,500 hectares. You can think about it as the size of the island of Manhattan in terms of kind of the width. So, downtown, financial district, and then uptown Harlem, Central Park, etc. The PEA area sits on a very small portion of basically the financial district of New York, of Wall Street, that type of area. As you go through, you have kind of Midtown and Central Park there in the middle. That's kind of our central area. And then out to the east, you'd have Harlem, and that up that way continual. So it's a huge property package. That's the original property package. Within that, we have 5 high priority targets that sit in the central block and the eastern block, which we're drilling right now with 2 drill rigs. Of course, those are just our top 5 right now. We've got over 150 other targets throughout this original property package. But this last year in 2024, we actually tripled our land package within this trend. We call it the San Dimas Panuco trend. And that includes adding 10,000 hectares to the south, of the original property package, where the major vein structures like Copala, Napoleon, Animas, et cetera, trend onto this property package. And then about 30 kilometers to the north, basically equidistant between San Dimas and Panuco, we've also acquired a new district, very large district. And this district has never had a diamond drill on it. It has very dominant structures that look exactly like Napoleon running north-south on it, very high-grade structures based on our sampling, tons of historic mining there, but again, no consolidation, no exploration. So we think that we have a really unique opportunity in the Panuco district here in this area of Mexico. As you recall, I mentioned earlier that people seem unwilling or wary of coming into this area of Sinaloa. What we found 5 years ago was that it was actually a very reasonable place to work, and we found the people were very excited about opportunities in mining, very hardworking, very open to building something special here. So we feel that we have a competitive advantage. We want to basically dominate this region, and in order to do that, I think what we can do is grow through cash flow. So those early years of cash flow, pay back the mine. After that, we're going to have a substantial amount of free cash flow. And what I'd like to see is that, project 1, which is that PEA area, ends up funding project 2, project 3, project 4, et cetera, throughout the land that we own in this area. And I suspect that, instead of being a 20 million ounce silver equivalent producer, we could become a 30 million, 40 million, et cetera, silver equivalent producer out of this region in Mexico. And that would put us, safely within the, top 3, top 4 silver producers globally, including the majors. And I think that's all possible out of this area here. We think we know it's massively underexplored, but we know it's a prolific exploration area. So just backing up from that big vision, currently we have 2 rigs solely focused on exploration. I don't think that we're going to see drill results come out before the end of the year, but I think as we head into 2025, parallel to the development of the project, we're going to see great news out of the exploration of the project.
Michael, thank you for that, and I appreciate how you guys are looking at this, and it sounds like you guys have a lot more to prove here as you guys move this company forward, and there's some pretty big goals here as well, but you guys also have some of the assets to potentially reach some of those goals. So thank you for how you guys are looking at this, and also that overall investment proposition and that upside that can be had while you guys bring forward the first productive deposit. One of the other things I want to chat with you about is the work that the company is doing to gain local, community, and state level alignment. Of course, the federal alignment is there as well, but maybe let's just stay on the local community, maybe the state level. Talk a little bit about some of the things you guys are doing there to gain that community support and alignment, as well as company efforts to really, Michael, and I think this is important, help educate people about the importance of mining and the foundation it provides for good economy.
Well, we have been very active in this area in terms of government in Sinaloa, and our country manager, director of Mexico, Hernando Rueda, is the head of the mining cluster, which is basically a state organization. So each state has a cluster, and Hernando has stepped up to be the head of that. And so we've got excellent relationships with the state level government in Sinaloa. Federally, we've been able to build great relationships as well with the new incoming government, and that's been very important for us. But beyond that, I think what's really important is having alignment with the communities. So the communities are really the most important thing. We look at it from, I always say we're a silver company, but we look at things through the lens of the golden rule. The golden rule is to put yourself in the shoes of others and treat people the way you want to be treated. And I think that really kind of simplifies, what one does in a country where we're a guest. You wouldn't want someone coming into your neighborhood and just doing what they want, without any consultation, without any benefit to the community. So that's the lens that we look at things through. I think that's been well received in the districts, in the communities within the district. So although we have great support from a government side and great relationships there, what's really important is I think being good stewards and good community members in the actual areas that we work.
Absolutely agreed. I think it's absolutely the critical component, and it kind of builds from the ground up, right? Like if you have the local communities aligned and on board and they understand and they get it, it seems to help influence and assist the state and also the feds with their decision making. And as you well know, I mean, the constant battle to educate folks and actually build skills with respect to the importance of mining and the fact that mining is involved in everybody's everyday life is so important to understand as well. So I appreciate how you guys are approaching this and the work you guys are doing there on the ground to progress the project as well as educate. At this point, we know that the company is really not for sale, but of course, as you know, the company could be for sale if the price was right, I suppose, and shareholders were okay with that price. But just talking overall strategy, and we have a really good flavor that the desire of this company is to move this forward, become an operator, become a cash flow company and an operating company. But as you know, of course, the M&A out there, when it comes to development juniors, it seems to be occurring in the later stages of development, unless there's, a really amazing discovery. I think, obviously Great Bear is a good example that you've already brought up. But generally, we're seeing M&A transactions occur later in the stages of development, perhaps after permitting, major de-risking events. Just generally, Michael, non-Vizsla, just what are your thoughts on how you're seeing that trend going from your desk? Because I know you look at this stuff. And then, of course, you guys have the desire to build a mine and operate it. But, if there was an M&A transaction for the company ahead of that, obviously you guys would need to consider that if it was at the right price. But just talk about those two components, the M&A and the stage that a junior would be taken out, and then also what you guys would really need to see to potentially accept some type of an offer.
I think that the M&A is a good barometer for the industry in terms of where we are in terms of the maturity of a bull market. And there's no doubt that we're in some stage of a bull market. If you zoom back at the charts and in the last 10 years, look at the coal price, and transactions have been occurring. But what we're not seeing is what we saw really at the top of the last market, where companies were being bought for massive premiums at crazy valuations for a few drill holes. And that's when I think you start to see that's a pretty mature bull market. Right now, what you're seeing is sensible acquisitions, companies making acquisitions really to kind of put themselves in better financial shape, so that later down the road they might be able to make these bigger exploration stage acquisitions. But a lot of rationalizing of portfolios as well. So we've seen a few transactions now out of the Newmont portfolio. Of course, SSRM just bought Cripple Creek, and there were some others elsewhere that occurred. That's been a bit of a weight on the M&A market, because everybody's basically been dealing with that in the process. Like the big boys have been working through the processes with these projects. I think once this is over, we might see a little bit more of a rampant M&A scene, where companies are targeting either later stage development assets or producing assets. I think producing assets are kind of the flavor right now. If you look at the last two acquisitions in silver, both were in Mexico, both were epithermal deposits like Vizsla's here, and underground operations. I think that underground operation is something key as well too. I think companies want to see underground versus big open pits now, certainly in the silver space. And so, I think the attitude of corp dev teams now recently have been to not make any dumb decisions, because it's been a time where making a dumb decision has been very costly. But I think there's going to be a position here where a CEO is talking to shareholders, and the shareholders want to see M&A for growth, and corp dev teams and management teams of bigger companies are going to have to play catch up, and perhaps that does spur on earlier stage acquisitions or development stage acquisitions. So it's an interesting time. I'd say that it's kind of moderately bullish in terms of the M&A scene, but there's been some high profile takeovers recently. So things can change. I don't know that we're really going to see in the near term any major early stage exploration takeovers. I think the action is really going to be in that producer, and then maybe moving down to later stage development. As for Vizsla, we recognize that we have an asset that basically a cornerstone asset for any producing company. We don't want to give that away. We want to be the company that benefits from that. Now, it's our duty as shareholders and as fiduciaries of the company to review and assess any opportunities that may maximize value for shareholders, and that's the lens that we look at things through. But as for now, the way to maximize value for shareholders is to go from the 0.4 times PNAV average developer multiple that you're getting right now into production to get the PNAV multiple that's over 1.2 times. So there's about almost a 200% increase in the average producer PNAV over the developer PNAV that you see currently in the market. And so, there's no sense in us, trying to trade Vizsla pennies when it's worth dollars in the future.
Michael, that's well said, and I agree with the approach here. I think you're right on with what you said there, so I appreciate the comments. Well, Michael, short of anything else you want to add, I think we've had a good discussion here so far, and I want to be respectful of your time here. So thanks again for talking to us about this. I'd like to leave it there for now for this introduction program, but I'll leave you with a couple of questions to close up here. For potential investors who are listening in, the company has a market capitalization of about 748 million Canadian dollars. Why should Vizsla Silver be considered within the institutional, family office, and retail investors' portfolio at this stage?
Well, I think it's an excellent company to consider, and the reason that I've been buying the stock as the founder and CEO of the company is because I think it's undervalued, and I think it's going much higher. And the reason for that is because we have something that's so very rare right now, not only in the silver space, but in the mining space. And that's a project that we can develop ourselves, fund ourselves. Great evidence of that is that we have over close to $90 million in the bank right now, a large portion of that equity required to build this project already on hand. And that this is a project that is very fundable through conventional methods. And when we do fund this, and when we go through the de-risking phases preceding funding and the development, that's what they call the golden sidewalk. So it's a period where you've taken the risk out of the project. Theoretically, of course, there's always risk in construction, but the funding risk, the permitting risk, and the engineering risk, and you're going through final stages of pre-cash flow into cash flow. The way that the PA describes the project now is a top 5 silver equivalent producer. This is at a time where silver is in very short supply, under supply, and we expect the silver price to climb much higher. So I think for all of those reasons, it's a really important time to look at Vizsla Silver. Our goal is to become the world leading single asset silver primary producer, and that's a very rare space that maximizes value for shareholders.
And Michael, the best way for folks to reach out to the company?
We love to speak to our shareholders and prospective shareholders, so you can reach us at our website, which is VizslaSilverCorp.com. All of our contact is there, but you can also find us, on Twitter and things like that. But just feel free to reach out.
Well, Michael, really appreciate the time and the introduction today. We look forward to seeing more results coming soon, and of course, company progress during the first half of 2025. And also, we're looking forward to having you come back to update.
Well, thank you very much. It was my pleasure to be here, and would love to come back in the future.